Hey, what up, guys? Welcome back. It feels like it's been a while. I checked that the last time I posted a video was a week ago, so I think it's a bit overdue. So, today we're gonna do a nice educational topic that a lot of people have requested me to do, and that is the use of the New York midnight opening price. Okay, I'll repeat that, the New York midnight opening price. So I'm sure many of you have heard of it. Many of you have probably incorporated it into your trading. It is a concept which was developed by ICT, as many of the concepts that us SMC traders use. We have to give credit to the man because he is, what I say, the godfather of smart money concepts. So it is something that he innovated, and it's just such an awesome tool, or I would say confluence to use. And even if you're not a smart money trader, it's just it just gives setups like all the time if you understand it, if you know how to use it. I've said this to people before. You could literally just trade using this. Obviously, not it being the only confluence, but using it as in basing your trades on, is the New York midnight opening price a factor within this trade setup? And just trading those, you would find many trades. On a single pair, I would say at least 2 or 3 times a week, there's gonna be a very nice setup with the use of that New York midnight opening price. If you're trading multiple pairs, if you're trading like, for example, Nasdaq, Euro, USD, and gold, chances are that at least one of them are gonna give you a very nice setup every single day or on that day. So today there was a very nice one on Nasdaq, so we're gonna look at that. So let's first just look at a bit of higher time frame in terms of just the market structure and all of that, right? Okay, so I'm on the 15-minute now. I know it's not like 1 hour or 4 hour, but you can understand market structure, higher time frame market structure on a lower time frame. Just because I'm on a 15-minute does not mean that I'm just looking at lower time frame, because it's just more detail. If I go to a 1 hour or 4 hour, I'm going to see the same thing. Just with the 15-minute, I can see more detail. Like, for example, if I pull this chart like this and I look at it like this, I can understand higher time frame structure like this, looking at the 15-minute. But I'm just seeing a bit more of the intricacies of what happened in the price action. Okay, so we just want to get a little feel for what's going on here. Okay, so yeah, let's look from here. Okay, so we had a high here, and then we came up and we swept it over here. So price made a higher high. This we would have seen as a break of structure to the upside. Okay, so break of structure. Then you see this move originated from this point, right? Came up and broke this high. So when we break this low, we can consider there to be somewhat of a market structure shift or a change of character, however you want to characterize that. So there we go, market structure shift there. And then we continued lower, and we also broke this major external low. So it was a continuation break of structure to the downside, right? Okay, so break of structure. Cool. So yeah, break of structure to the upside, sweeping liquidity over here, continuing lower, breaking the low. So there's a bearish shift in market structure when we break this low, and then we also break the external low, so we have another bearish break of structure to the downside. So it's nice confluences here, right? For bearishness in the market. Obviously, look, we have to look deeper, further. Like, we actually do have to. Don't think just because I say, oh, you can look at higher time frame on 15-minute, that you just do that. You should be going on high time frames for hour and daily and all of that. I'm just doing that for the purposes of today because I don't want to do a whole big thing. I just want to we remember we're doing the New York midnight opening price, but we need to just get some context in the market before we actually jump into that. Okay, so yeah, we break lower. We have these highs here. Remember, this is the order block here, right? This bullish candle here. What is the problem with it? Well, first, it's extremely low for selling. Extremely low. How do you know if it's extremely low? You just look for where's the premium in this move, right? In this impulse. Where is the 50% of this impulsive move to the downside? So yeah, I opened this GAN box, so you can use a fib as well, from the high to the low, 50%, the midpoint. So you see, this is equilibrium, so above here is premium. So this order block is a trap for any FOMO traders, early sellers over here. Also, whenever you want to trade, if you're looking for shorts, if your trade is not above liquidity, you are likely going to be taken out. So like this one, there's no liquidity that's swept when you come up here. This is the first layer of liquidity, this order block, and here we have a big fair value gap over here, or relatively big fair value gap here, and here we come into it, we respect that, and then, so let's take this box away, and then we do continue lower, and we have another bearish break of structure when we come here. So here we actually do come below it by like a few pips, so this would have been break of structure to the downside. Okay, cool. So New York midnight opening price. So what is it? Well, it's the opening price of the candle at midnight in New York. So how do you know where that is? So if you trust me, and if you're in South Africa, I'll tell you that it's 6 a.m. in our time, okay? But if you don't trust me, I wouldn't trust me either. I would go and do this myself. You go here, you click on the clock at the bottom here, and then gives you all of the time zones. So you look for New York. Okay, here we go. So it's UTC 4, New York, right? So now we're on New York time, and you look for the midnight price, right? So the price at midnight. So this is the midnight price. This candle is midnight in New York, basically. So the open of that candle, the opening price. So if it's a bullish candle, so if we look here, it's this candle over here. It's a bullish candle. So it's obviously at the low of the body, because that's where the candle opens. Okay, so let's put it there. Let's just make it some color, maybe. Here we go. Okay, so it's that blue line, right? So market opened here somewhere in this region this morning, and then we continue lower, and then here was midnight. I'm actually okay, yeah, it's fine. Okay, so it's midnight here. So what happens? We come below it, and we come above it, and then we come below it again, and then we break this low over here. We come just below it. Some people will look at this and be like, okay, how is this a break of structure? How is it a break of structure? We go below this low by only a few pips. Isn't this a sweep of liquidity? Well, it is, and it is also a break of structure, because every break of structure is a sweep of liquidity. If you're saying it depends, what do you mean by is it a sweep? Because if you're saying it's a sweep, you know, what do you mean? what is the point that you're making by saying that? And what I mean is, whenever we go below a low or above a high, it's always a sweep. But in general, you can categorize sweeps in two ways. You can categorize it as a continuation sweep or a reversal sweep, right? So when this occurred and we swept this low, we broke this low, we made a lower low. So price makes a lower low here. It's not an illusion that price goes lower than this low. So it is a lower low. But obviously you don't know if it's a sweep to reverse price or sweep to continue price. So if this was a reversal sweep, as in it's gonna sweep liquidity to reverse, you would be looking for it to come above here, probably somewhere like, you know, for price to make an actual higher high. However, this we can see was actually a continuation sweep. So when we sweep liquidity, always when we come below, if price is coming lower and we come below a previous low, there's always likelihood that there's going to be some kind of reaction to the in the opposite direction. But just because we have this reaction coming up is not giving us indication, it's not necessarily telling us that price is going to reverse. It's just indicating that price has achieved or completed some type of intraday objective, as in sweeping the liquidity below this low, and now smart money ultimately wants to aim at accumulating more sell positions at higher prices before taking price even lower. Okay, so if this was a sweep to reverse, what would give us that confidence that it was that? Well, there needs to be some kind of decent shift in market structure. Market needs to make at least an internal higher high. Okay, so if we look here, we sweep here. So where would the shift in market structure be, the internal shift? In my opinion, in this case, it would be, well, if we look here, we have this low and we break it. So we have a break of structure to the downside. So it's a break of structure. So if we look at this impulsive move, it comes here, down, drop, drop, drop. The impulse begins at this high. So therefore, the break of this high is going to give me much more confidence that this sweep of liquidity is a sweep to reverse price. So if instead of it respecting the zone, if it continued up and broke higher like this, then I would consider, okay, here's a market structure shift. If there's confluence for us to go even higher than this, potentially I would look for price to pull back and then go higher. But as we can see, the bearish market structure or the bearish order flow was still being respected. Price did not even come close to this high. It didn't even come close to, yeah, I mean it came reasonably close, but you could see it struggled to go even close to the high, into the resistance of this high. Okay, so I wanted to say something else, but now I totally forgot. Okay, anyways, so here we have midnight, right? This blue line, remember we changed the clock here. And look, I don't keep it on New York time because I'm not in New York. I'll just know when the time is. So I know it's 6 a.m. now in my time, in South African time. When all the daylight savings happen, I think it's gonna happen. It's normally the first week of November. They're gonna move the clocks around a bit. So when that occurs, then it's gonna move from 6 a.m. to 7 a.m. in South African time. But if you're ever confused, if you maybe one day you wake up and you're like, oh, is it, if you're in South Africa and you're confused, like, okay, is it 7 a.m. or is it 6 a.m., then just go to your clock and change it to midnight, or to New York time, this one over here, and then just check where's midnight, New York, and then okay, cool. Then just, if you want to change it back to your time, so I'm changing it back here, South African time, then yeah, easy thing to do. So, okay, cool. So yeah, this is midnight. Okay, so what is it? What is the midnight opening price besides the fact that it's a price at midnight in New York? Well, for me, how I view it, and a big part of my trading is in considering intraday structure, right? And then also considering premium and discount. So premium and discount is relative, because if you, for example, you look on a daily or weekly chart, price can be at a premium, for example. But if you look at the intraday structure, so you look at 1 hour structure or 15-minute structure, price could be at a discount. So sometimes it's tricky, it's tricky to really understand this, and it takes a lot of experience and exposure to price to really get into the flow of price, because that is what it is. It's, you need to be in the understand how price is flowing. So like, for example, just because daily time frame structure is bullish, the current intraday structure might just be screaming sell. It might just be screaming its lungs out that it's a sell day, and it's going to sell from a premium zone within the intraday structure, even though the daily structure might be saying something else. So we have to be reactive to price, especially intraday traders and scalpers, because yeah, you have to be attentive to what price is saying to you in the day specifically, and how it is relating to the higher time frame. Okay, so this New York midnight, right? For me, I treat it like a reference point for premium and discount. Okay, a reference point for premium and discount. So remember, when I showed this, right, this break of structure, when we broke lower here and we swept this low, and then I said, if we had broken this high, there would have been a decent market structure shift. So if we had come up here and come above this high, there would have been a decent shift in market structure. If that was the case, and this maybe materialized pre New York Stock Exchange open, then market would, to me, would be looking like it's setting up for a buy to go higher, because now there's a shift in momentum after the day had continued lower. Now there's an indication pre New York Stock Exchange open, the momentum would have appeared to have shifted from bearish in the intraday structure to bullish in the intraday structure. If that was the case, now this New York midnight opening price, like I said, it's a reference point for premium and discount. So if we had come up here and we'd seen a bullish shift in market structure, where do we want to buy from? Well, we want to buy from a discount. And now the fact that we are above the New York midnight opening price, this becomes a strong reference point for what is a good discounted zone to buy from. So like, I'll show you guys again, if instead of what it did here, price had come up here and broken this high to shift market structure from bearish to bullish, then potentially I would have looked at price to pull back somewhere into this region where the New York opening price is. And look, don't just be like, oh, there's the midnight opening price, I'm gonna buy or sell from there. You need to build the confluences around it. In other words, the points of interest which you're looking to trade from, if the midnight opening price is nested somewhere around that zone, it becomes an extremely strong confluence to use to base your trade around. So like earlier when I said you can use this New York midnight opening price, like just that, for your setups. You have to still, you have to base it also, or you have to base it around a point of interest. You have to look at structure. You can't just you can't just see the midnight opening price and then buy yourself from that. You need to understand the narrative in its entirety, not just using one confluence. Okay, but so if this was the case, if we had broken this high, had a bullish shift in market structure, Then if there was, some kind of liquidity here and then a fair value gap and an order block that was lining up around this midnight opening price or below it is actually preferential, then we look for, okay, for price to come into it and then to buy, to target whatever the liquidity, whatever liquidity you're identifying. Okay, but in this case today, what happened? Okay, so we broke this low, and remember, when this occurs, we don't necessarily know, is this a sweep of liquidity to reverse price to take it higher, or is this a sweep of liquidity to just have a pullback so that more accumulation of sell positions can occur so that price can continue lower? So that's actually, quite an important side note and something that you can maybe observe in price. When you see liquidity sweeps, you'll see, was this a liquidity sweep to reverse price, or was this a liquidity sweep to continue price? So in this case, this was a sweep not to reverse price, this was a sweep to continue price. But like I said, in this, like at this stage in price, when we're up here in London session, it's not really, you can't really assume that it's definitely going to go down here, because if we look in this zone, here's a lot of fair value here, here's a fair value gap, here's a lot of inefficient price action here, here's also relative equal highs. So this was not a invalid outlook to see price actually going higher than this and potentially coming into this fair value gap, or potentially, sweeping these highs and coming deeper into what's higher up here. So we have to follow price. We have to not be predictive, but be reactive. And another thing is, look, this is not, for me, it's not the time to trade. It's like, in the middle of London session, when the majority of the volume, if there even is any volume in London, the majority of the London kind of just fades out. And in this stage, it's just not nice to trade. You sit in like a trade, this is a 15-minute, and look at all these 15-minute candles. It's better to just step away and come back, an hour before New York Stock Exchange open, do analysis, and then trade from there, instead of, sitting on the chart all day and, being in a trade and stressing like you can't even go make yourself a cup of coffee because like you're just watching your drawdown. Instead, and then, you're in the trade for so long, and like it's like you're at break even, like the price just hasn't moved, and then, you New York opens, and then maybe your trade was correct, like you took the right trade, but then New York gives you exactly the same entry point. So you've wasted all these hours sitting in this trade when you could have just entered it in New York and been done in like a much quicker period. But hey, everyone has their preferences. It's just my opinion. Like trading, less is more in trading. Everyone talks about trading, the freedom of trading and all of that. How is it free? How are you free when you're always trading and you're always in this stressful situation of being in a trade? Like, let's be honest, trading is, it's stressful. It puts a lot of pressure on your mind, and maybe you don't notice it, but you can notice it eventually. It's like burnout. It's like, because you're constantly just, where's the freedom in that? You want to live a forex lifestyle, well, then just chill. Okay, but anyways, that's just a little side note. So like I said, it's a reference point for premium and discount. So now, if price is below it, like, so look how we come below it, and yeah, we snipe into it multiple times. So the first time we come below it, yeah, we come up, we test into it, bang, we continue lower, we come into it again, come into it again, come into it again, come into it again. Yeah, price just didn't want to go above this zone. This is clearly just showing a lot of resistance to this level. At the same time, you can look at this as, okay, this is potentially inducing, it's potentially trapping, so I'm gonna enter sales here, and then my stop loss is gonna be above here somewhere, and then New York is gonna come and just take me out and then drop. Very possible. So I want to cut things off a little bit here. Let's go to New York, right? or to New York Stock Exchange Open. There we go. Okay, so this is the 15-minute candle prior to New York Stock Exchange Open. And we are just gonna jump straight to the 1 minute because it's everyone's favorite. Let us look what we can see. So what do we see when we're at the zone, right? Well, firstly, we see these equal highs, higher, relative equal highs. Okay, we see that price is showing a bearish shift in terms of here's a low. We continued lower, we came up here, and then we continued lower, right? But yeah, this break of structure, we break this low, we break this low here, over here, like that. Okay, so I'll just show that here. Lower low created in price. So when we look at this low that broke this low, it came from where? It came from these highs. And what validates these highs as, you know, a decent zone, a strong zone to look at? Well, we have to look at the order flow, because we see here how it's flowing from here. Fair value gap here, test into it here, come lower. So where is this originating from? It's originating from this. And this, you see here, you see that there is still fair value that has not been tested in that zone. So you see that tiny little fair value gap here, and then the order block here, right? Okay, so we're just looking at, you know, pre-New York. We need to look at the possibilities. And for me, the main possibilities is, okay, above these highs here, we would like to see price to at least take out these highs. And then remember, this blue line right here is the New York midnight opening price. It's a reference point for premium. If there is bearish higher time frame confluence, okay, so if something on the higher time frame is telling us that we can go lower, so for example below price, if they are like if we're coming close to previous day lows, or there's like a daily, you know, daily lows with fair value below it, or whatever, if there's some zone below price that price could potentially be magnetized towards, there needs to be something that supports your bias. Like I said, you can't just look at it and be like, okay, there's a New York midnight opening price, when price comes into it, I'm gonna do this, I'm gonna do that. You have to obviously, you know, build your confluences in order to have a high probability setup. Okay, so let's just go a candle forward and see how, because this is now 1 minute before New York, right? So let's go. Okay, so New York continues lower, a little bit lower. This is inducing, because now think about it, if you're a trader and you're thinking, okay, we are gonna go lower, if you have a bias or a bearish bias, and now the candle opens and the first 1 minute candle spikes down, many traders, and I know it's many traders, and I was one of those traders many times, you see that candle and you're like, oh damn, I'm gonna miss this trade. It's FOMO. You enter you enter at a low, you sell low, so you get trapped, because in all likelihood these highs, something here needs to be taken for price to really continue lower. So let's see. So there we just, next candle we just go, we take out these equal highs here. At this stage, you know, with a lot of my videos I don't go into entries, because it's not really about the entries that we're talking about. there are so many ways to enter trades, and there's so many different entry models and styles and confirmations. Yeah, that is another topic in itself. But yeah, like it depends. It really depends on you as a trader. For example, you could have just taken a sell as soon as we swept this high, with maybe a stop loss where maybe above this high. Because remember, the order flow is coming from here, and then so here we have this sort of zone where we break lower, right? We come up, we sweep the liquidity. So remember, you always want to trade above liquidity, from above some layer of liquidity if you're selling. So like in this impulsive move, here's a small order block, extremely low. Here is another order block, but then here's a nice inefficient zone, like fair value gap here. So above the liquidity, bang, we tap into this fair value gap and we continue lower. So you could have entered sells from here and potentially put your stop loss just above these highs, if that is your style. If you're more aggressive, you could have, enter it here and then put your stop loss above here. Alternatively, wait for a confirmation. So let's see what other possibilities there are. And remember, we're looking at this line here being the midnight opening price. So it's not like you want price to touch it. It's not like you want price to it's not like a layer, or it's not like a part of structure in terms of it's not a high or something. So it's not like if price goes above it, now it invalidates it. Price going above it is actually a good sign, because now if this is a reference point for premium, you actually, or yeah, if it's a reference point for premium, you actually want to see it go higher, because now we can say price is at a premium. So if we go above it and then we show bearishness after that, it becomes a very strong confluence to continue price in a bearish direction. Okay, so let's go a little bit forward. Let's just see what happens here. Okay, so there we have like a decent reaction after we sweep those equal highs, and we continue lower. Nice. Continue, and then we break structure, right? We break lower again, yeah. So we make a lower low in price. For me, this is not over. This is not necessarily over in terms of, if we break this low, this is not guaranteed that price is not going to go above this high. Why do I say it? Well, there's no internal liquidity in this impulsive move here that breaks this low. There's absolutely no liquidity here. And if you've watched one of my videos, I think it's called Validating Your Points of Interest, you'll see one of the requirements that I look at is that in the impulsive move that breaks structure, there needs to be some kind of internal liquidity. So when price comes back into it, there's liquidity to be swept, so you can trade from above the liquidity. If there is no liquidity, then potentially the high becomes the liquidity. So I don't know if we are actually going to take it. I think we did. Like, let's just see. Yeah, so yeah, this was also just another trap, because now if traders are looking at bearish structure, now they're seeing this low being broken. Let me make this a bit wider. They're seeing this low being broken here, so we make a lower low here. So they're potentially looking for this to trade from here with stop losses above here. And you see here, here's a decent 1 minute fair value gap here. So it's inducing many traders to sell with their stop losses above here. What is that allowing? It's allowing for smart money to take traders out of the market, so that smart money can accumulate sell positions from higher prices. Okay, so there we take that out, and yeah, we tap into this line, which is the midnight New York opening price. Okay, so but at the same time, it's still not over. Like, for me, it's 100% not confirmed yet. But yeah, everyone has their own style. If you want to take it instantly, you can do that. I take instant entries all the time, sometimes confirmations. It really depends, and especially if you're trading Nasdaq, you need to be quick with the thinking, because it's not going to give you 500 years to make a decision. You really need to be sharp with your executions, especially if you're trading market open. Okay, so let's just see, because what I want to okay, let's just continue. Okay, so there we continue even higher, and we come into this. Remember, we had the unfilled inefficiency here, so fair value gap and more, and the order block in there. So I don't even know if we're gonna respect that. Let's see. Okay, okay, cool. Okay, so we respected that zone, right? Very nicely. Like, this is the other thing, you get traders that do this type of trading, like, and for them it's extremely profitable. You can see why it's extremely profitable, because it's like just insane risk reward with like small, very small trades. Like this one is like a 8-1, and it's like the trade is done in 5 minutes. But you gotta have, you gotta have balls for it. You have to be a certain type of trader, because in that style, sorry, let me take this away. In that style of trading, taking losses can be quite regular, because your stop loss is so small. You're allowing for very little margin for error. But if you apply it consistently, as in if you don't, catch on other nonsense, if you stick to your strategy and you're disciplined about it, you don't go into revenge trading and over trading, all that, this can be extremely profitable trading like that. Because think about it, if you're catching an 8-1, so if you take a loss, you lose 1%. If you take the win, you make 8%. If your setups are like that, you can have 3 losses in a row and then 1 win, and you're still making 5%. So yeah, that's all just about consistently executing that. Because what would mess you up or mess your account up is being inconsistent with your approach. So yeah, anyways, okay, so now we've had strong I would say confirmation, because like remember this one when we came down here and we broke this low. Now there's a few things. Look at this is not like, when we come down like this, it's not exactly inspiring me with bearish momentum. It's like, okay, we're breaking lower, but we're kind of sweeping. It's not really showing much strength. Whereas this, there's huge candles, 1 2 big candles. So in ICT's language, there's strong displacement that's occurring here. There's a clear displacement that's happening here, because we're coming up here and then we're just rejecting off this inefficient premium zone, and we're prices displacing to the downside, right? So now you would say, okay, well, what about the internal liquidity? I don't see much internal liquidity here. Well, first we have to see, because maybe there's going to be a generation of some kind of liquidity here, and then we're going to spike up to come down. But there's not always the necessity for that internal liquidity. When is it not necessary? Well, when liquidity has already been taken. So yeah, this liquidity was taken. We came up and we swept this high after we trapped traders, because it looked like there was a bearish break of structure. So this liquidity was taken. So the next one, if it occurs again, it's not always necessary for there to be an internal block of liquidity here. Okay, so we first have to wait for the low to be formed, right? We have to know where the low is, because we can still continue a bit lower first. But if we just assume this is the low, we want to sort of find a zone in it where we want to trade from. So we want to find where's the premium of it. So we'll find, yeah, okay, cool. very cool. Here is the equilibrium point, right? So all of this is premium over here. So taking a normal fib, we'll see. So here's 50%, here's the 62 and the 79 here, right? So these are the optimal zones to trade from, because you don't necessarily just want to trade from 50%. You can, it depends on your risk reward. How much are you willing to catch, or how much are you, how much are you gonna gain off this trade? If this, for example, is like 15 pips and your target is like 60 pips, then yeah, enter on the 50%. If you know it's not gonna work out for you, look for a deeper zone. Another thing is, you can wait for the extreme point, being this order block here, but not, it won't always get tapped. You won't always get that. Yeah, it's, you're never gonna, it's, I wouldn't say never, but you're gonna miss trades if you're too stringent on that. It's not necessarily a bad thing, because when you do get that trade off the extreme point of the impulsive move, it's very high probability. But it also takes, like how we're looking at this setup, it takes a certain type of trader. For me, it's like, if price comes up here and you want to only trade from this, you don't cry about it if it doesn't come to your entry, because trading, you need to be disciplined, and you need to just be responsible. Don't, like, it's like in business, if you're an owner of a business, you're not crying about everything that doesn't go your way. You need to be reactive, because your business is going to crumble if you're always putting in like a negative attitude. Oh, I missed that trade, blah 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 blah, and you're like, that leads to revenge trading and all of that type of stuff. So yeah, just whatever you decide to do, stick to it and be responsible over it. What I mean by being responsible, don't blame anyone because the only person to blame, and there's no one to blame, it's not about blame, but what I mean is, you are totally responsible for all of your decisions in the market. Whether, even if you're taking signals from someone else, you are still responsible for the execution of your own trades. If you take a signal from someone else and it blows your account, you can't go, confront that person, because they didn't put a gun to your head. You made the choice. You were not confident enough to trust yourself, so you put your trust in someone else. That's on you. So yeah, just whatever you decide to do, just accept it. Okay, so let's go forward a bit. Okay, so cool. So price is playing a bit at this low end, which is good, because what is that? It's inducing. It's creating fear in a lot of traders that, oh damn, if I don't go short now, Nasdaq is just gonna drop like 100 pips, and I'm gonna be sad about it because I didn't execute. So it's inducing people when it's sort of just hanging around at the low end. Another thing pay attention to is to the calendar, the time, because if I'm not mistaken, there was a fundamental which came out at the hour mark, and if you're aware of that, then you should be on high alert that, okay, potentially on the release of this fundamental, there could be an entry to take. Okay, so let's just see the time here. Okay, so still a few minutes. 1, 2, 3, 4. Okay, so let's go 2 more forward. Okay, 1 more. Okay, so yeah, you will see here, even like there was no internal liquidity here, there was a decent generation of liquidity at this end here that happened over a period of almost 15 minutes. So yeah, plenty of inducement, plenty of traders selling from the zone, basically out of FOMO, because they want to catch this move coming down, and they're impatient basically, because they feel, oh, I've been waiting for 15 minutes, maybe price is not gonna come up here and I'm gonna miss this trade. Okay, this line we're taking away, this box we're also taking away, and this line, I don't even know what these lines are for, but I'm taking it away. We all want to see, remember, this was the New York midnight opening price, this blue line here. So let's see, the next candle is the news release, right? And then it sort of just spikes up and then it continues lower. So what have we seen? Well, we've seen how we can use this New York midnight opening price to our advantage. Because why? It's a reference point for premium and discount. So if we are bearish and price is below the New York midnight opening price, you want to see if there are other confluences nested around the New York midnight opening price, and then you can potentially trade from that zone. So just like this, Nasdaq at New York Stock Exchange open was here. Remember, we went down a bit, we came up, we swept these equal highs here, and then we broke these lows here. This induced many traders because it made a lower low, and yeah, obviously there were many traders that were looking for shorts because the structure in the day had continued to be bearish and price did not show any strong willingness to go bullish. At the same time, this was inducement because, you know, we said that there was no internal liquidity here and there was no strong displacement in this move. It was quite a weak attempt at going lower. So we come there and then we sweep liquidity, we sweep these highs again, we come above the New York midnight opening price, and we come into the remainder of this fair value gap which we saw over here. Cool. And then price actually displaces, so it clearly changes 1 minute structure in terms of, because look, when we come above here, the 1 minute structure technically is bullish because now we make higher highs. So when we break this low, it's a change of character to the downside. So this is extremely textbook. This is like really a textbook sell. And this, basing your trade off this, or having your trade idea, how can I say, created around this New York midnight opening price. When you start to backtest it and you see, you need to experience it multiple times. Please just, if it's your first time, please don't just go and trade it, or you need to see it many times. You need to backtest it and on multiple things, because this because it's an American time price, it works very well on all US pairs. So indices, so US 100, US 30, SP 500, currencies, Euro USD, USD, JPY, even gold. It works on all. I promise you. I've traded it on many things. I've used it and I've backtested it on many pairs, and it's extremely applicable on many pairs. Okay, and then we break lower here. We have this internal liquidity generated pre-news, and then we just continue up into around the 70% zone, right, which is a good, like I said, between the 62 or the 79 and the 79 is the ideal optimal zone to trade from. And like I said, this order block, if you wanted to trade from it, you would have missed your trade. So it's really a preference. Do you want to be this trader that wants to get extremely tight stop loss? If you do, then you have to be patient and you have to accept that not every trade is going to go your way, or not, you're going to miss plenty of trades as well. Yeah, and that is it. So we spent a lot of time on that. I sort of went on a tangent on many other things. So if this has piqued your interest, I would advise you to watch it again. And I put a lot of other things in here, so there's a lot of things that you can take from this video. Another thing, okay, let's leave it for now. Yeah, and then like I said, you need to do the higher time frame. We only went from 15, we just basically went from 15 minute to 1 minute, but you need to obviously do your preparations, because this is important for targeting. Where are you trading to? I know there was a major low somewhere, I don't know, previous day lows, into further extensions, the daily fair value gap somewhere down here below 12,800 or something. So yeah, I hope everyone found that valuable. I find it's very simple. It's really very simple, but it takes backtesting. You really need to backtest it, backtest it, backtest it, backtest. Just because I say that you can just trade this and you can find setups all the time using it, like you still need to do your homework and your preparation in it. Because if we spend a lot of time, I can make this video hours and hours and hours and hours, and still I would still say to you, go and test it for yourself, because price and price action is so dynamic. It can happen, things happen in just in so many different ways. And just because you see it once, or I show it to you once in this way, there's so many different ways that this price can appear or it can be used. So yeah, everyone, I hope you enjoyed that. And if you don't follow me on Instagram, please follow me. um I post a lot of stuff on there as well, like information, and I'm also very accessible. Like, I'm very happy to respond to people who have questions, all of that. I really enjoy the engagement and when people take value from what I'm sharing. So yeah, also if you want to like and comment, and if you haven't subscribed, you can subscribe. I would really appreciate that. Yeah, other than that, I hope everybody has a good week. Good week of trading, and yeah, stay safe. Cheers.